Here are some important financial terms. Market capitalization. When you see a company's market capitalization on your Google searches of these different stocks, it is basically the current price of each share of the company times the total amount of shares out in the public. So Apple, that I will have Apple in a few other slides, the first $1 trillion company that is speaking volumes. Mega companies are over 200 billion. For a $1 trillion company, I think they're gonna have to say giga. Like, it is astounding. So market capitalization, how much is the total amount of money they have at a single time. You have the PE ratio, the price to earnings ratio. The price to earnings is how much you are paying for a company's earnings. If Apple right now generates $1, you are buying the company's income at $20. So every dollar Apple makes, you're paying $20 more for that same dollar. But you're seeing that the company is huge, it is global, and you see that I will still get a return of investment if I hold on to it long enough. So the P to E ratio is a great gauge to see how pricey a company truly is. A company that you see can be $10 a share. However, that is still not a good gauge. Do not look at the dollar amount alone. If the P to E ratio is 100, that means that every dollar they make, they're selling their company for $100. So they win more than you win. You want to buy those value P to E ratio stocks, unless you are going for a more growth stock that's going to have a higher PE ratio. I think the coolest thing over all this stock stuff is the dividend yield. With the dividend yield, you're able to hold a stock and get money quarterly. Some stocks will be 2%. A lot of utility companies will have 4 to 5% dividend yields. And for the year, if you had $1,000 in that stock, you will have $50 running up to your account every single year. No matter if the price is going up, no matter if the price is going down, you are guaranteed that money because it is yours, and they have bounded that they will give the shareholders dividends yearly. Revenue. We all should know what revenue is, but revenue is the amount of money that's coming in. Just gross net, no, it's just all the money that's coming in. Net income is your net, it's your profit, your net income, your profitable income. EPS, your earnings per share, it's a good tool to see. It's more on the complicated side, but it's basically the amount of earnings they had for the quarter divided by the shares. So you want to see usually an upward trending earnings per share year over year. Net profit margin, that's another one that you have to do more research on, and then also cash on hand. How much money do they have in their bank accounts? Right there, looking at this balance sheet, Apple has $32 billion in their account. Like, just not invested, not anything. Like, they literally have $32 billion. Incredible. Incredible. Because with that cash, they're now able to invest in their own company, buy back shares, make something innovative. You have enough money to do whatever you want. Your homework after this video, just again review the terms talked about in this video, but after that go to Investopedia and get a whole article on each term. Google the company's stock chart. For example, Google Apple stock, and you'll be able to see the chart of their daily performance all the way up to their 5-year and maximum performance over the entire history. And it's great. You want to definitely invest in, if you're just investing, invest in companies that are growing and growing. You don't want to invest in a company that is on a downward spiral. Right now, Snapchat has been on an extreme downward spiral. Avoid those stocks that are going down if you're just into investing. In more advanced techniques, you would actually profit off of the downfall of a stock. However, right now, when you first get started, please invest in companies going up in value. And then look at the balance sheet. Look at the balance sheet of each company. You can actually see, rather than just a chart, you can also hit the financial section and you'll see that same balance sheet that I had showed for Apple. So here's what I like to do. I'm a swing trader. And I use technical analysis. I actually picked up on it fairly quickly. However, it took me so long to start. I started investing last summer with cryptocurrency, and just bought and let it all go to waste. Like, didn't sell, just hodl. Just you the intro is to just buy and hold. With other things, you have to trade. And I myself, I'm a trader. I'm not going to hold something that's declining in value unless I am having a position where I benefit from the decline in price. Let's look at Apple's Google. Very easy. You can actually understand it's going up on the left side. However, I myself needed a more technical, more specific chart myself to see what's really going on. And I need to see support, resistance, moving averages, volume, RSI, MACD, Ichimoku cloud, just so many different indicators, support, pivot points. I mean, there's endless amounts, and I don't even really want to get into the technical analysis because I do not want to scare away the beginner investor. We're gonna get this money, and we're gonna really just make it as simple as possible. Until next time, y'all, don't forget, subscribe, like, comment down below. Let's get this money. Also, I do have a Robinhood referral link down in the description. If you sign up with my link, we're both going to be able to get a free stock. There's nothing better than a free stock. Like, sure, $5 is cool, but I wouldn't mind getting a Sprint stock for free. So take some time out to use that link. Also, follow me on social media. I'll probably be getting a specific financial channel. However, you can still follow my public channels. Appreciate y'all for coming in. I know it's a little bit long, but I'm going to try and get 10-minute videos in. We'll see ya soon.